Hey, ladies and gentlemen, this is Chris Sost, and I just wanted to take this opportunity to thank you so much for tuning in to today's episode. Hey, everybody, thanks for tuning in to a new episode of the Gig Economy Lounge. Today's episode, we're going to dive into the numbers of Uber's earnings call for Q219. Obviously, when they first came out, it was very staggering. However, once you break down the numbers, it's not as staggering as you know it is on the surface. So really quickly, Uber recorded a net loss of $5.2 billion in the quarter, and you might be like, "Oh, that's a lot." A quick little asterisk next to that, $3.9 billion of it. So the overwhelming vast majority of it was due to a once-in-a-lifetime hit that was stock-based compensation related. So, it's really common for Silicon Valley companies for this to happen. Although, Uber's payout is much bigger. $300 million of it went to drivers. The rest went to employees, investors, and anybody else that was promised some sort of stock-based compensation. Now, when the company first reported the staggering losses, everybody was like, "Oh my God!" And then everybody took away from it that the growth is slowing, and it's true, growth is slowing somewhat in rideshare. But when you break down all the verticals that Uber is in, when you look at Uber Eats and when you look at Uber Freight and when you look at their alternative mobility solutions, their e-bikes, their scooters, everything else, all those sectors are seeing triple-digit growth, which is great. I think Uber Eats grew 108% year over year, for Q218 to Q219. It's great. Uber Freight is seeing triple-digit increases. I believe they have 36,000. That's right, 36,000 truck drivers on the platform. So it's something to look out for. Obviously, alternative mobility. If you live in a major city, you see these scooters popping up here in Tampa, Florida. We have Spin, Bird, Lime, and Jump. Jump is owned by Uber. So I really wanted to get into this article that I seen that came out this morning. It was actually an interview on CNBC. So they interviewed Dara and basically states, Uber CEO Dara called the company's staggering $5.2 billion loss in the second quarter a once-in-a-lifetime hit as he tries to steer it towards profitability. Let's see. The stock plunged 5.9% in afternoon trading, or after-hours trading, trading yesterday. However, it's recouped quite a bit, and Dara has said he is targeting a 30% revenue growth in the back half of the year, compared to net revenue growth of 26% in the second quarter. So he's looking to increase each quarter by about at least 4%. It's a great target. If you're increasing your revenue 30% quarter over quarter, and you're 10 years into your game and into this game, it bodes well for you. Let's just leave it at that. He added that spending will increase, but it will decline as a percentage of revenue. So as any company gets bigger, naturally they're going to spend more. However, the key metric is spending as a percentage of revenue. So he wants to shrink the percentage, but obviously spending will continue to increase. I think we've got a very good visibility in our own business as far as the business model goes and how we can tweak it and how we can drive more efficiency. We think we can not only survive, but we can really thrive in this business, Dara said. Now, Dara has pushed back on fears that Uber has lost its quote-unquote founder mentality after ousted CEO Travis Kalanick, known for his growth-at-all-cost approach, left the company in 2017. Honestly, rideshare is where it is today in terms of global reach because of Travis Kalanick and his approach. However, you can't use that approach forever, right? So there's no black and white way to go about business. Obviously, businesses have to evolve. Dara said that the founder mentality, that edge, that fire is absolutely something we need to keep going at the company. It's a big part of what made this company successful, and I absolutely think it will play a big part making the company successful moving forward. These words right here indicate to me that Travis will poke his head up in some form or fashion within the company over the next 12 to 24 months. And I think that push for Travis to be more involved with Uber again is based off of Dara's lackluster abilities to sell the Uber vision. You know, when you look back at, pause really quick, go back to 2010, 2011. When you look at the storytelling abilities of John Zimmer and Logan Green versus Travis Kalanick and Garrett Camp, it is very clear who was the better storyteller and who was the better visionary, because Travis Kalanick raised more money, 10 times more capital than Lyft was able to raise. Now, that may have been strategic on Lyft's part. I don't know. But all I know is that Travis should and probably will play a bigger and bigger part in Uber's future moving forward, which goes back to an early article right around IPO time where a board member on Uber's board stated that it's not out of the realm of possibility that Travis, I don't want to say pulls a Steve Jobs, because Steve Jobs took a little bit different of a route, but will propel himself back to the top of Uber at some point in the future. Now, back to the article. For the quarter, Uber posted a $4.70 per share loss, which was larger than the $3.12 per share estimated by analysts. Revenue also came in a little light at $3.17 billion. Yeah, it's a little light, you know what I mean? $3.17 billion, compared to the consensus estimates of $3.36 billion. The company reported a staggering $5.2 billion loss during the quarter, which was largely owed to the stock-based compensation. While stock-related compensation costs are common amongst Silicon Valley companies, Uber's losses were bigger than total 2018 losses for all but 3 S&P 500 companies. The article continues to go on to talk about Dara continues to face increasing pressure from investors, that he can get Uber on track to profitability. That's likely to be a tough task given that Uber has long subsidized rides. He also addressed the stock's lackluster performance since the IPO. He admitted, "We've got to do a better job as far as telling our story to the markets." Again, signaling he's admitting that he's not doing a good job at telling Uber's story to the markets. I know Travis Kalanick is itching to get his face back out there. I think he's got to be I think he's got to lay low for at least another 6 to 10 months, 12 months. But eventually Travis will be able to come back out and be the face of Uber again. That's what I believe. Because I don't think that Dara's got the good economics behind him. Like, he's the economic brain. So he will technically be able to be the one that gets Uber to profitability. However, in order for Dara to be able to successfully get there, I think somebody like Travis has to be the mouthpiece for Uber, telling Uber's story, conveying Uber's vision of where things are going. That way, it buys Dara time to bring the company where it needs to go. He said the company was recently forced to increase prices in New York City due to stricter regulations from the city's Taxi and Limousine Commission. As a result, Uber has had to, quote unquote, restrict the number of drivers that can enter the marketplace. I think it's a tragedy. Well, quoting Dara, I think it's a tragedy. I think when you put into laws that are not market driven, you wind up helping special interests and hurting other people. Dara continued, "The neighborhoods that need transit the most, our business is suffering there, and that's just not fair." So at the very end of the article, it kind of gives you the perspective on the $5.2 billion loss, which is Excluding stock-based compensation, Uber's losses were approximately $1.3 billion, or about 30% higher than the prior quarter. So Uber's sweet spot in terms of a burn rate, or the amount that it loses every quarter, is right around $1 billion. So once you exclude the one-off hit of stock-based compensation, which it's one time, you don't have to worry about it, 1.3 billion, which means they're about $300 million over where they're normally, at in terms of losses. It's something to keep in mind, though, and to keep an eye on is, can, Dara deliver on that 30% or 30% plus growth rate in terms of revenue? Now, there's a multitude of ways that they can go about achieving that. Obviously, they have upfront pricing, so they can tweak prices, nationwide. Think about it. If they just added, let's just say, 8 cents to every single ride globally, I think it covers it, right? But 8 cents, here is obviously, not as significant as 8 cents in somewhere like India or Bangladesh, or, in a country where obviously the currency conversion is drastically different. So this is definitely something to keep an eye on. Interestingly enough, after the interview, there's another video that pops up that comes from an analyst, or is with an analyst, who is predicting that Lyft will technically, he believes, will become cash flow positive or profitable before Uber does. However, he warns that, in terms of the network effect and various synergies in the market, Uber is better positioned to make boatloads of money in the future. So it's one of those catch-22, right? So if you're an investor and you're purely an investor, you like the idea that Lyft becomes profitable quicker. However, if you're a long-term investor like me, you're doubling, quadrupling, 10 times, you're putting 10 times down on Uber, because in terms of their overall business model and how it's growing and how it's evolved, I think that as rideshare drivers, we tend to think about Uber and Lyft as just like rideshare companies, but they're really not. Uber especially is really not a rideshare company anymore. Like, yeah, that's what they started off as. It is what it is. They have, delivery systems now, both, for personal food delivery and for logistics. So, I know that they're focusing really a lot of efforts, obviously, on driverless technology, but more importantly, they're really focusing and putting a ton of money into Uber Freight, because it's one of those markets that hasn't been touched yet. Sort of like how, the taxi industry hadn't been touched yet before, Uber and Lyft came along, or I should say the for-hire industry. We're going to expand it outside of taxis. So, that's something to keep an eye on, is how fast does Uber Freight grow? Uber Freight just made it into Europe. That's an untested market. There's all these markets that Uber Freight has yet to get into. When it comes to Uber Eats, it's ultra competitive. You have so many competitors out there. But DoorDash bought, I think, Caviar, although Uber was really interested in it, but they did turn it down. Uber is looking at acquiring Postmates. So is DoorDash. And I think once you consolidate the amount of real competition out there, I truly believe that all these companies, DoorDash, Lyft, Uber, I think all of them have the ability to become profitable. And all these losses, right? So if you're a rideshare company, or thinking about starting a rideshare company, when you see the bigs of the bigs losing hundreds of millions, billions of dollars a quarter, it de-incentivizes you to go out and start your company, because if you don't have the capital backing necessary to keep up with them in terms of what they can spend, then you're really just spinning your wheels. And when you're a small person, opportunity and timing is everything. I mean, think about this. If Sidecar would have came out, 3 years later or 2 years earlier, what would the landscape of the gig economy be, in today's world? It's a good question. Nobody knows. But it really just drives home that point of timing is everything. So I see all these companies, Call a Ride, Vibe, Trip, Just name off all of them. Doesn't I'm honestly, I'm gonna try not to even keep up with them anymore because it's just nauseating. Uh, they're all just trying to ride the coattails or the wake of Uber and Lyft, and for the ones running those companies, it's great. They may get their money out of it. Hell, they may get a good bump or return on their investment, but by and large, Uber and Lyft are going to be the kings and king and queen, or king and prince, however you want to look at that, or queen and princess, however you want to wrap that little analogy up. That will be the duo of the U.S. Now, when it comes to outside of the U.S., obviously Uber is competing with Didi Quaching. However, they do own equity in Didi Quaching. They no longer really have competition in the Middle East because they bought Careem, which was the big player there. There is talks about how Ola and Uber want to work out the situation in India. Obviously, Uber and Ola are the top competitors in India. There are smaller players, but those are the two dominant ones. Uber already worked out its battle in Russia with Yandex. They created a company in conjunction with Yandex Taxi. So everything is sewed up there. When it comes to Southeast Asia, they don't have competition. They just own 23% equity in Grab, which really only has one real competitor, which is Gojek. It's just going to be really interesting to watch how things unfold, because it's really difficult to compare, Uber and Lyft, when Lyft, in terms of size, in terms of map coverage, is very, very small. They're a regional company. Or by regional, I mean, North America. They're a North American company. Uber has a footprint across the globe, whether it's actually operating or owning interest in or equity in. So stay tuned for the next episode. Now that the earnings calls are out of the way, I want to get back into tips, tricks, and just things to think about for rideshare drivers and gig economy contractors. I have some information coming up on Instacart strategies. Yes, Instacart, as well as Tackle, Roadie, and a whole bunch of other on-demand gig apps. Thank you for tuning in and have a wonderful day.